One of the most valuable lessons I've learned over the past decade in real estate is how essential it is to learn from the industry professionals. That's why I'm gathering professionals from across the country to share their experiences with you. This is a Gregersen's podcast, where experience and passion come together in the world of real estate. I'm Casey Gregersen, your host, and I'm very excited you're tuning into today's episode. As always, if you have questions for me or any of our guests, please reach out to me at casey@gregersenproperties.com. Now let's get started with today's podcast. All right, welcome in everybody. Today's guest is Anson Young. Really excited to talk to Anson. We actually were just up in Cheyenne a couple weeks ago. Anson gave a great presentation on similar topics. We were talking a lot about how to use leverage, ultimately how to finance your next deals, and we talked about a lot of different components. But today we're kind of excited to dive into like private money and like how Anson's raised some of it, kind of some of the strategy behind it, and even kind of dig into like who it's a good fit for and like what that person looks like, what their kind of risk tolerance is, how they can structure it. Love just really to dive into all that. So, but anyway, before we do that, let's just hear a little bit about your background, Anson. I know you pretty well. I'll introduce you as he's a great author, influential person on Bigger Pockets, great part of their community, and yeah, ultimately just a ton of experience in fixing and flipping, having a really very advanced company when it comes to going direct to seller, fixing and flipping, holding rentals, a little bit of everything from, I guess, Denver to Omaha to now Indiana. Is that right?
Yeah, Indiana and Ohio. Yep.
In Ohio. Wow. What else? What did I miss? What did I miss, Anson?
I think that was it. I think you got it all. No, I'm also a licensed agent. I've been licensed for almost as long as I've been investing. And so I talk to a lot of investors and agents who toe both of those lines. So that's another kind of thing that I like to learn more about, how other people are running their businesses when they're, both things. So I'm, licensed in Denver, so that covers me here in Colorado, but I'm not licensed in those other states. And so that creates different paradigms in both, in all those different markets. So, but yeah, I think you hit the basics for sure. So
yeah. And I think Anson's a great guy to talk about this. And I know we're always kind of talking to different passive investors about their options. So just wanted to give them a different perspective. So, well, we'll kick it off with that. Like, Anson, why would you say being a private money lender is so attractive with the type of people you work with?
Yeah, I mean, the type of people that I work with, they are really interested in real estate. They love it, but they don't want to do the hands-on dirty work. So whether it's somebody who is kind of a real estate nerd and they follow a lot of different fix and flip shows, or they catch what you're doing online, see some of your Instagram stuff or your videos, and they go, I want to do something like that, but I also have a family and a full-time job. And so can I, put in $25,000 or $50,000 or $100,000 into the projects that you're doing and kind of live vicariously through that while earning a return. And so that's kind of our first category of private money lender. And then the second category is older people who have either sold a company or they're kind of past their active career. They want some passive income, and they know that, usually private money rates are a little bit higher than conventional rates, unless you have a rich uncle or something that's going to give you just like 2% loans or something like that. Right. I don't have any rich uncles. So we're usually borrowing, a little bit above prime. And so for those investors, they have some cash sitting around, or they're lending out of their IRAs, and they're saying like, hey, this 8, 9, 10% is what we're really looking for. And so they enjoy those higher returns. They're actually secured by the promissory note and the deed of trust. So their money is secure. And as long as they trust you as the investor, they know that lending to you over and over is going to net them that 10% APR type scenario. And so those are the two, people who come to us and are basically like, hey, here's some money, do some projects. So
makes total sense. Good. Let's just dive in there too, Anson. When you talk about the security of it, right? Because that's a question we get often. And I think a lot of people probably just don't understand, right? They don't understand actually, yeah, I'm investing in you, but really as opposed to like investing in like a small business or maybe a venture capitalist or some other type of investment, like it's much more secure. But go into that, how you guys secure it.
Yeah, absolutely. And there's like 100 ways to skin this cat. I know investors who pull lines of credit from their investors and they don't secure it with a deed of trust. I like offering the security of like of just saying, hey, your money is actually backed by a recorded mortgage, and so there are legal ramifications. If I get hit by a bus, you're actually still secure in that first position loan on the property. If I run off to Mexico and stop paying the mortgage, you're still secure. And so so kind of no matter what happens, it's probably the highest level of security for an investment type, because it is tied to that property, recorded at county, recorded with title, so that again, if I do get hit by a bus, you actually have legal ways to take over the property and get your money back, or have the property sold through my estate or something like that and get your money back. And so having a deed of trust and a promissory note just protects you as the investor, and it protects me as the borrower. All of those documents are very standard. We just use like the realtor forms basically, and file those at county, and it spells out exactly how much is owed and who pays what, and the term and the interest rate and all of that stuff is all spelled out. So there's never any questions of who's doing what and when. So it's all right there, and it's recorded, which is nice, so that it's a legal instrument that's basically recorded against the property. I don't know how much more secure you can get than that.
Yeah, I'm with you. Yeah. What I was going to ask too, a follow up to that is, because I'm assuming you're not typically going up to 100% of like the value of the house, right? Do you have a threshold of like, because you mentioned, hey, handing the property back to somebody, but some people might say, well, shoot, I don't want to manage this, or I don't want to manage this half done property. How do you kind of mitigate that with people?
Yeah. So each lender kind of has their own appetite for risk. And so some will only lend up to a certain percentage of the after repair value. So what that property is going to be worth and should appraise for after it's all fixed up. That varies by investor. Some of our guys will go as high as like 80 to 85% of that ARV, the after repair value. So I have to make sure that, of course, I'm getting a deal that I'm, well below that, so that when I'm, borrowing my money, I can borrow up to that 85% of the AP or ARV. And so a lot of times what that does mean is that since we are finding good deals, that we are zero money out of pocket for these properties. And so we can borrow 100% of the purchase and the fix and come out of closing with our first draw payment for starting construction and our earnest money back. So we're literally $0 into the deal. The equity is what kind of cushions that investor for helping out with risk.
Yeah, no, that makes total sense, Anson. Because you're buying right, and then you're basically giving that that private money lender, you're giving them a cushion because you bought right. And then the plus side is for you as the operator or the general partner, whoever it might be. Now we don't have to we don't have to potentially put cash into the deal, but basically share a piece of the pie, right? Because if we had if we did have the rich uncle at 2%, or we just had this we wouldn't be working with a private money lender. But it's kind of a win-win, right, where they ultimately get to participate in the deal, right, and make a return.
Exactly. Yeah. Exactly.
And typically, it sounds like too, you mentioned that typically it's a little bit over prime, right? So it's going to be better than the bank, because I'll typically tell people, yeah, if when it comes to draws and because we can do a lot of this through a bank, right? But the benefit of doing it through a private money lender is it's a much simpler process, a little bit more flexibility. There's trust between both sides to where it just makes it a little easier for everybody, right?
Exactly. Yeah.
On that note, do you have any good hacks for like the paperwork side of it? Or you kind of talked about all the forms that you fill out, but have you gotten, because especially you mentioned you do a lot of kind of like putting one investor or maybe multiple on a specific property, but you're recycling every several months. Have you found any efficiencies in the paperwork and making that easier?
I mean, at the end of the day, the deed of trust and the promissory note, they're pretty standard instruments. There's pretty standard forms. And so the most we really have to change is just dates and property address, and then obviously the lend amount. And so we're at most changing, 3 or 4 fields on a PDF. And so I don't know how to streamline that much more than that. It takes probably, 5 minutes to go and do that, look it over, send it out for signatures, all that kind of stuff. And so So, being able to do that makes it easy. If it's your first time filling it out, I can totally understand if it's going to be, kind of a headache to go through the entire thing of a promissory note or a deed of trust. A title company should also be able to help you out with that. But again, we're changing the address, the date, and then the loan amount. And if it's the same borrower, or excuse me, the same lender, then we're changing like 3 fields and then sending it back out. And so paperwork's not too crazy. Of course, your lender's going to want to see that they have lender title insurance on the property. So there's going to be like a couple of follow-up things that they're going to want to make sure is all good to go and secure. They might even want to see your homeowner policy to make sure that there is lender insured on there as well. But other than that, it's again, we go to private lending because a lot of times it's super easy. I can send out a couple texts, I can get an okay, I can change a couple fields on our form, send it out, get it signed, record it with title, and we're pretty much off to the races with funding. So
yeah, moving forward, which is for a lot of reasons, right? It's easy for you and it allows you to be nimble and move quick.
Yeah, exactly.
Good. Cool. Well, I was curious too what you've done to like kind of cultivate relationships, because obviously when people first start out, they probably maybe not everybody's comfortable, right, being a private money lender, whether that's maybe lack of knowledge in real estate or just maybe they haven't worked with you before. So I'm curious how you kind of cultivate and kind of get people started, and because I'm sure once you've done 2 or 3 deals, people have made a good return, then it's much easier. But what's that look like to get to that point?
Yeah, I mean, private money is a relationship. It's relational lending. And so you have to have, some kind of relationship and some kind of trust going into it. And so, building that out is, it depends on the investor, but, some are going to want to see kind of a portfolio of, all the numbers and, what are the last like 5 or 10 deals that you've done with all the before and after pictures. We've talked to lenders once or twice. They've seen, 1 or 2 properties that we've done, and then they're just ready to go. They're just like, yeah, we don't need to see the next one, as long as the numbers make sense, and they'll vet the numbers internally and then, give us a yes or no. But so it really just depends on the person, because it is such a people and relationship business. There are some that are just, they really need that hands-on. They want to come out and they want to inspect for the draws. They want to do all of that. And then there's the guys who are so hands-off that they're just like, here's the full rehab amount up front at closing, see you in 3 or 4 months. Like, and so it really depends. But as a new person who's getting into this, a track record definitely helps, unless it is like a family member or somebody who just like truly believes in your vision and what you're doing. But I would say like full transparency on what you're doing to that lender, for numbers, evaluation, where you're getting your rehab numbers, your after repair value, so that they can feel more comfortable that that you've done your research, that you know what you're doing, and that they're more comfortable with lending with you. And it's the same with with you and I with a new lender. We're going to go above and beyond to make sure that they have all the numbers that they need, all the information that they need, so that when it comes time to pull the trigger, they are, all the questions have been answered. They feel good, and they feel that they can trust what we're doing, and that their money is safe at the end of the day.
Yeah, that's good. Got another one. And this one might put you on the spot, but is there a common objection, or just one that you see a lot from private money lenders, that like just one thing that you notice a lot of people ask, that just they aren't quite ready to go for whatever reason, or they're not quite ready to jump? Any common ones you've seen?
I mean, that's a good one. I've been lucky enough to deal with kind of veteran lenders who, I haven't had to like hold their hand to get them across the finish line. I probably one one guy I can remember had, he was probably our most difficult guy to work with. He's a great guy, but he just had, millions of questions, of course. But he was really wanting to know how we're going to keep, the project on schedule, contractors, and making sure that, we had backups to contractors, so that, if the drywall guy didn't show up, we at least had another guy in the pocket, because he just really wanted to stick to like that 120-day timeline. And so like they're they're going through this the first time with you, and so they don't know how you project manage, or if your contractors or are reliable, or if you're always over budget or always over on time. And so some of that's just going through the first deal to kind of work out the kinks with that person. I always offer to open the books and tell them, like, look, hey, if you want to come out and inspect every every draw, we can go through the timeline, and I can show you exactly what's coming next and loop you in every single week. You're just making sure that you're catering to them so that they know that their money's safe and they feel comfortable through the whole process. But I haven't had to like get a total newbie from zero to the closing table on the lending side. At least they've lent a couple different ways before they get to me. And then so I haven't had that like virgin lender thing. So
yeah. I like it. That makes a lot of sense. Got it. So we were talking earlier, you mentioned a lot of your private money lenders like being doing like the shorter term projects, and you just mentioned the one that like, hey, after 120 days you wanted to be in and out. So is that, I'm just curious, love to hear more expanding on maybe why you have more people like that, and is that yeah, I'm just curious the driver on that versus I'm sure there's other people out there that are like, lock my money up for 4 years, I don't want to do the paperwork, see me in 4 years.
Yep. Yeah, and I have I have some investor friends that have, their lending is more like that, where they'll just get the money for a whole year. They just owe that APR at the end of the year. However you used it or didn't use it, you still owe that money. That hasn't been my experience with my lenders. They really like to be tied to an individual project. And I'm not the only person lending that they're lending to. And so they like to have some flexibility where 2 or 3 times a year they can turn that money over to different investors as they need it. Sometimes they're doing their own projects. And so that's kind of where that 3 to 4 month cycle comes in, up to 6 month cycle, where they just like that flexibility. If they want to, in 6 months, take all their money and move to Mexico, they're not tied with me for like 4 years, like you said. And so they really love the security of first position loans, and they like the opportunity to get out within 6 months or so. Now, of course, the loan is structured to where it's, we have an option. We have like 6 month loan, but an option to go a year with really no penalties. After that, I don't know. I'd have to look at the promissory note really close, but I think that it is like a 1 year max. But whether we're doing burrs and we're refinancing back out, or we're doing flips, we're typically getting their money back in 90 to 120 days, somewhere around there. So
yeah, that makes a ton of sense. I'm sure every time you do that, get more and more confidence when right, and you can recycle it. There's obviously benefits to you as the investor or the operator, to where you're only paying on money you have out. So
right,
really
yes. Yeah, no, that part's really good for cash flow, is to make sure that you're only like paying money that you have in use, which is good.
Yeah, really interesting how you've gotten more people who like that. Yeah, is it any certain? I guess the other point you made was the fact that they bounce back and forth, right? So they're doing other projects, because I think a lot of private money investors might be weary of putting in money for, like you say, for a full year, or maybe they're going into a syndication where they might be holding for 5 to 10 years, but they get the flexibility of doing this. So it sounds like that's kind of been your go-to. And is that, I don't know, has that been a conversation you have with a lot of private money lenders, to where they're just like, hey, we want to be flexible. I want to get into this, but I'm not ready to commit for 4 years.
Right. Yeah, it just seems to be the MO of that type of investor. And a lot of my private money guys have just referred me to their friends who also lend. And so it seems to be that vein of, that's all they know so far. Maybe after a few conversations, we could talk about doing longer term projects, but I haven't needed to, since my primary investment is flips and burrs, and I can burr the money out and refinance them out within 6 months anyways. And so having 4-year money I don't really need it unless I'm starting to do development or something. And so, or I guess larger syndication deals, but these are guys who have typically $800,000 to $2 million. And so they're not they're not sitting on like $50 million to lend out. And so they have, one or two projects, maybe three or four tops in their, in their allocation of how much money they can lend. And so, that kind of changes the game for those lenders. They're like, I want that $400,000 back, within 4 months or 6 months or whatever. So then they can figure out what to do next and recycle it or not. They like having that flexibility.
Yeah, that makes total sense. Okay, so what would you tell like a private money lender to look for in an operator? What are the kind of some of the things that they should be looking at, things that they should be checking? You mentioned track record, but what are the kind of the key drivers if you were in their shoes?
Yeah, of course. I mean, track record's number one. Figuring out exactly what they've, the projects that they've done, the timelines, the budgets, wanting to know transparency on, hey, did you go over budget? Were you over on time? What went wrong? What went right? So then you kind of know what to expect on how that operator is going to deal with those problems in the future. And so, I mean, if somebody comes to you and they're saying like, oh no, we were perfectly on budget, we were perfectly on time, and, we made $1 billion, I would be kind of skeptical knowing how flips work to be like, oh, the stars aligned, of course, nothing stays on budget, nothing stays on time for one reason or another, but kind of like figuring out how they deal with those issues. And I think that kind of one pain in the ass lender taught me was he had a lot of questions like that, which is like, well, what are you going to do if, it goes over by 4 months? Like, is there enough room in the deal? Are you comfortable with it? Asking questions like that was the first lender who kind of pushed back on some things and really got me to think like, oh, this is what's important to him. And so, figuring out what that means. But definitely, besides track record, making sure that they have some sort of reserves so that you're not just lending them all the money that they have. So, if you have a $50,000 rehab, making sure that they have, a little bit of a cushion to make those payments, or to, if that project goes over by, 10 or 15%, do they have that money in hand, or are they going to come to you asking for that money and having to, modify your promissory note or whatever to try to get them to the finish line so you can get your money back? And then like any kind of references that you have, like who's the agents that they're working with, the contractors that they're working with, like knowing a little bit more about who this person has surrounded themselves with, and if they're actual professionals, or if you're kind of like lending money to a guy who has like a circus around him, is going to be a problem at the end of the day. So those are things that I think that I would want to know from somebody that I'm about to lend, $400,000 to. And of course, almost all of my lenders double check the numbers. Just like they'll go through the line item budget, make sure that I'm not, way off by, some line item. And then they also make sure that, they review the comps that I send so that the ARV looks good. Some of them have extensive real estate knowledge and some of them really don't. But they just want to they'll always double check those things. So our lender packet is always, stocked full of different scenarios, the numbers of what that means. Obviously a full line item budget, and very comprehensive CMA, or a comparative market analysis of the ARV, so that they can feel comfortable that, we plugged in the right numbers to the formula to get to where we want to be. So
that's a great tip. Yeah. So it sounds like, maybe not everybody would have thought about that on just like just a one-off flip or a one-off burr deal. You're actually putting together an investor packet essentially, right? So to cover that again, you said going to have the comps on there, going to have the rehab budget, sounds like the scope, and anything else you typically add into that?
So yeah, like what we've used is something called like the house flipper spreadsheet. There's a guy on Bigger Pockets that made it a long time ago, but I've been using that because it has a really good lender report. So I can plug in all my numbers. I can plug in my entire budget. It actually gives me, like maximum allowable offer. It gives me, different places to plug in all my closing costs. And so on the lender report, it gives them the, the expected return. It gives them, all kinds of different numbers on the timeline, and like any contingencies on going over on time or over on budget are included in there. So it shows that we've done the budget at 50,000, but we've actually factored in, a certain amount of overage if it's a 10% overage or whatever. And then also on time, like how many months is it going to take to close, and then padding in a couple extra months. And so they get to see kind of all of that in a nice, one page, detailed format, which is really nice. All of my lenders have really liked having, the more numbers and transparency, the better. And so they like having a concise report that tells them like, hey, this is what it looks like. And I think the Bigger Pockets calculator also has like a lender type format output. So if you use the flip calculator, I think that there's a lender output on that as well. And so just something that's just for the lender, that they can see all the numbers, and not just the investor numbers of like, hey, I'm going to make 50,000 on this. They're like, yeah, but like, let me see all the other numbers. Like,
yeah, I like it. Oh, that's great. That's a great tip. I was thinking too, like kind of a hypothetical conversation. Say you're talking to somebody who's been in the stock market and knows the stock market, right? They've invested there. But they're like, for whatever reason, maybe they're tired of the ups and downs. Now they want to diversify into real estate, but they don't really know anything about it. But they've heard, maybe they've talked to their friend who's investing in real estate, or a private money lender. How would you kind of get that person, kind of like you said, you mentioned a lot of your lenders are typically, you haven't had to take them from 0 to 1, but say you were that person, getting them comfortable with kind of investing in a deal, basically.
Yeah. I think that conversation becomes pretty easy when you put the word out there of like, hey, last year, our lenders made, 11% on their money, which, we paid out. Let's just make up a number. Like, because I've seen some guys use this as a tactic to kind of just, attract lending in. I'm like, hey, we paid out, $100,000 last year to our lenders. If you want to be, part of that, let's have a conversation, kind of thing. I think that, sometimes quantifying those numbers to an investor who might be used to that stock market kind of digital money that's just out there. If you're like, hey, we paid one of our lenders, $20,000 on their, $400,000 investment, that becomes real numbers to people who are used to just going on their, on their online stock trading platform. And it's just a number that goes up and down and may or may not mean much. And so, having that, and then that also shows that you have some sort of track record. Like, hey, this is our past performance. This is what we're doing. And that seems to pique people's interest too, of like, oh, they've been doing this for a while, and their current investors are happy enough to keep investing with them. And then of course, I think the security part is something that a lot of investors don't know about, of like, hey, all of our lending is secured by a first mortgage, and it's recorded. So there's no funny business. Like, I can't fly off with the property and, sell it on the black market or something. And I can't have my crypto wallet, hacked and the property's gone or something. It's like, it's just, it's real estate, and it's secured by a first mortgage, which gives you the best protection, of any mortgage instrument. And so, I think once you kind of attract them with like your track record and your numbers, and then also that security piece, which I think is huge, because a lot of stock guys, they just see it go up and down, and the CEO says something weird one day and it goes down, and then, the earnings report comes out and it goes back up. And, for us, we can just say, look, it's, these are the returns that we've been giving out. And this is our track record. And then it's also secure. So, I mean, if you want something different than, your E-Trade ticker, then, let's talk.
Absolutely. No, great answer. Great answer. The other piece I was going to get into is the types of ways to, I'm assuming a lot of your private money less investors have, like you mentioned, some of them, they've just got some runway or some allocated funds ready to go for it. But I'm curious other ways you've seen it done, and people kind of getting creative to using some income. So that could be a self-directed IRA that they're using and they've converted. Other ones, or just another big one I've seen a lot of people do is, if they've got a bunch of money in the stock market or in bonds or in cash, taking a line of credit on that so they don't have to move it, don't create a taxable event, and invest that. Have you seen people doing that, or any other strategy you've seen of people actually having the liquidity to be a private money lender?
Yeah, the IRA is a big one. So a self-directed IRA, we have 2 or 3 of our lenders that lend out of their IRA. And so as long as you understand maybe any of the differences of how that works, that maybe mainly just paperwork, or how their name is is put onto
On
the
title. Yeah.
yeah, on title. So as long as you understand how that works, it could be somebody that you're talking to that has IRA money that's stocked away from another company that they were at. It could be just a matter of saying like, hey, if you enroll that into a self-directed IRA, you could actually lend that out on real estate deals. Like, whoa, like most people don't know that.
Yeah.
And so, knowing enough to educate others can also open up those opportunities of, some people do have just, old IRAs just sitting around. They don't know exactly what to do with them. They have like a new, setup with their new company, but they have an old one that's just sitting there. And so, that $100,000 or $50,000 or whatever can be put to, actual use by lending it out. So not a lot of people know that. And that's the main kind of creative one that my guys use is, lending in and out of their IRA all day long. And that's, tax deferred. So it goes into their IRA without being taxed until they pull it out, later in life or whatever. So they like playing with that money of like, 420 out, 440 back in, like they growing it that way and having that tax deferred to a later date.
Oh, that's great. That's really cool how you explained it, Anson, because it seemed, I think a lot of people might have maybe heard about that, but think that it's too complicated. But as you said, sounds like it's just a matter of the title and the paperwork. And then, as you mentioned, the big benefit is you just keep doing it, and you don't pull. Another big factor is you're not pulling on it right away. It's a retirement vehicle that you're saving, but
right.
It sounds like it's pretty streamlined and been very successful.
Yeah, and if you have a good self-directed IRA company, they know exactly what to do for that paperwork and for any kind of weird questions or anything that you have. Like a really good self-directed IRA company knows exactly what it looks like to lend that money out on real estate, and exactly how the the names and the all of the details should be hashed out. And so you don't like I don't have to know that as the borrower, and they don't necessarily have to know all of that as the lender. The actual company that's holding their self-directed IRA, they know 20 different ways to use that money, and this being a really good one, they have all the details of how to actually use it.
Good. Okay, I got a good selfish one for you. Have you found
Okay.
any good tips of finding this? Because they talk about all this self-directed IRA money out there that's just sitting, not being used, and it's just a matter of like educating those people, letting them know, hey, you could be putting that into real estate. But you got any good hacks on how to bring those two people together?
Oh man, I wish I did. I would imagine that it's a lot like attracting other private investors, where I think if you go with educating yourself on how it works, maybe talk to some self-directed IRA companies, and then basically putting the word out there and educating people on like, hey, do you have an old IRA that's sitting around? Well, here's some uses that you can have for it. ABC. Some of our lenders use their IRAs to lend money to us on real estate deals that's secured by a mortgage. And if you want to know more about it, like, let's talk. I think that getting the word out there, just because I think 90% of people with IRAs don't know that they could do this. So just getting the word out there is probably going to be number one. Whether it's your uncle, your brother, people on social media, whoever it is that you talk to, most of them probably don't even know that it exists, and they might be interested if it's like not money out of their bank account, but it's actually money that's just sitting there anyways, that they could use and grow without without doing anything crazy. They don't have to liquidate it. They don't have to do anything like that. So
Love it. Cool. Well, we'll kind of wrap up here. I was excited to ask you this one. And I know you touched on it a little bit actually when we were up together in Cheyenne. We were talking about like kind of the state of the market and where things are going and kind of what your thoughts may be, and maybe kind of speak to people that are like, oh, shoot, I'm pulling back now. I'm scared. Interest rates are high. There might be a big correction. And I know you kind of alluded to it up there about kind of the upside if you can make things work now, just the upside if interest rates do come back down. But yeah, just love to hear your kind of overall kind of market going forward.
Yeah, I think, I don't think, and I don't see any of the market forces that happened during the last downturn, which was, basically subprime mortgage crisis that kind of dominoed the entire rest of the market. Right now, we still have crazy low inventory almost everywhere that people want to live, of course. And that drives and can cure almost all problems. Like even through the pandemic, it was low inventory that basically like just plowed through any problems that people had, because people still need a place to live. And so if you have, record low inventory, that demand is going to, outweigh any of the other problems. And so, higher interest rates can't really help that. So you can either sit on the sideline and wait and hope that things get better. By getting in now, you're basically kind of hedging your bets. You're saying, well, if rates go up, well, I locked in now. Okay, so I'm safe at 7% or whatever. If rates go down and they go down enough to where it makes sense, you can always refinance and save some that way. Now, I'd probably put money on it, but we're probably never going to see like sub 3% ever again. And I might even say like sub 4%. And so you're talking about a pretty average interest rate in the last 40 years being like 5-6%, even 6-7%. So if you're locking in at 7% now, you're pretty much locking in at the average. And it took a pandemic to make it go down below 3%. Hopefully we won't see anything like that anytime soon. And obviously the interest rates of the 80s of 12, 15, 18%, it doesn't look like it's going that direction either. So I think that this is kind of sort of the new norm. And one way that we're getting around interest rates is trying to maximize cash flow on all of our properties. Flips I don't necessarily care about, because we've been borrowing at like 8, 10, 14% since I've started.
Yeah.
And so I don't typically care that they're 7%, because that doesn't really apply to me on flips. But if I'm doing buy and holds, I see a lot of complaints about how do I actually cash flow in this market with these high interest rates. Well, you can either fight the locked in interest rate that you can't change. Like I can't change it. You can't change it. You and me together can't go down to the Fed and change it. Or you can try and change the variable that you can, which is, finding good deals. So, the lowest price possible on a deal can help mitigate some of that. Or you can help by raising up your cash flow and maximizing your cash flow on properties. And so like a long-term rental might be a so-so deal, but if you can turn it into a midterm or a short-term rental or a room-by-room rental and actually maximize that cash flow and be getting 50% more than you would on a long-term rental, that is something that's in your control and a factor that you can change. I can't change the interest rate, but I can actually evaluate this as a midterm rental and it makes sense and actually makes more money. Okay, so I'm going to go maximize my cash flow and I'm going to keep trucking. I'm going to still keep going on and buying deals because I can't change the interest rate. I'm going to work with what I can change and move forward.
Love it. Yeah, you can't fix that, but you still stay in the game. You keep moving forward, and as you mentioned, you get all that upside. If rates do come down, you can refinance it 5-6% down the road, and you've got that asset. It's probably appreciated, been cash flowing. Love it.
Yep, exactly.
Cool, awesome, Anson. Well, man, we're gonna wrap up there. Anything else you wanted to share today? We've covered a lot.
Yeah, we did cover a lot. No, I really appreciate having me on, and it's always good to see you and talk to you, of course. And yeah, if you have any private money issues or problems, reach out to Casey, and he can definitely help you with that. So
yeah, absolutely too. And can you share real quick, Anson, where can people find you if they got other questions on private money, finding deals, funding deals, all sorts of good stuff?
Of course. If you're on Bigger Pockets, you can just search my name and connect with me there. Send me a message. If you're on Instagram, find me at Young Anson. And yeah, those are the two best ways to find me. So
perfect. Awesome. Well, thanks a lot, Anson. You shared a ton of good stuff. I'm excited to share this like in the full form, because I think you gave a lot, and then also share some little golden nuggets you've been sharing throughout the episode. So really appreciate it.
Absolutely. Thank you, Casey.
You bet.
As you may have learned by tuning into this episode of Gregersen, the easiest way to make real estate investing hard is by going at it alone. So as you continue learning and seeking knowledge of the industry, I want to encourage you to build relationships with other professionals who are passionate about real estate. Whether that's an agent, a business owner, or a managing investor like myself, there are pros that want to see you succeed and are willing to help you by sharing their experience. You can always reach me by visiting CaseyGregersen.com and scheduling a call. I look forward to connecting with you and continuing to share my experience with you here on Gregersen's Mobile. Until next time, I'm Casey Gregersen. Thanks for tuning in.